We saw a real turning point in ETPs in 2020, given the volatility, lack of transparency as markets slowed or even shut down around the world. Investors turned to exchange-traded products to help navigate that volatility. ETPs, exchange-traded products, are a very broad category of products that trade on stock exchanges. They have been around for 30 years, but in 2020, at the height of the market volatility, in March and April, what we saw was increased usage. ETPs in the US were actually 40% of trading volumes, as investors really depended on them to manage portfolios and transfer risk. And we have seen this in lots of other periods of market volatility, but in particular in 2020, ETPs provided access and transparency to all parts of the financial markets and all different asset classes. One of the most pronounced observations was in the fixed income market, both with increased usage by existing fixed income ETP users, but also adoption by new users. Some ETPs traded thousands and thousands of times a day, and every time a trade happens on exchange, price formation is created, transparency is provided to investors, and there's also a feedback mechanism to the bond market. So we saw the ETP market providing utility both to investors, but also importantly to the bond market itself. The bottom line is that in 2020, investors significantly increased their use of exchange-traded products, and because of that performance and resilience, that usage is going to accelerate from here. For example, ETPs are about 10% of global equity markets, but only 1% of global bond markets. So over the next few years, that gap is probably going to close.